Hey everybody, Tom Berry here with ILS Legacy Holdings, and I've got a quick market update for you on the real estate market. Wanted to share an article that I read recently in BizNow, and it was a fascinating headline. Again, of course, all the headlines are fascinating. They want to get you to click on that. The headline was Marcus and Millichap loses $10.2 million in the quarter. Now, that was pretty fascinating. Marcus and Millichap obviously is one of the largest real estate brokerages for commercial real estate in the country. They're also one of the largest credit market brokers as well, meaning they broker a lot of loans for those same deals that they are brokering for sale. So the headline, as you dig down into it, Marcus and Millichap lost $10.2 million in Q4 2023. Now, to put that into perspective, Q4 2022, they made $7.2 million. So we're talking about a $17.4 million swing in 1 year. That is incredible, absolutely an incredible number. Revenue was down 37% Q4. It was down 50% for the whole year of 2023. And obviously, when you have a 50% decrease in revenue, you can't scale down your operations to 50% in 12 months. You have office space, you have all the upkeep and maintenance and all of the different infrastructure that you've built for a huge organization. So 2023 total loss for Marcus and Millichap, $34 million lost in 1 year. So what happened? Well, deal volume. And this is the point that I wanted to make in the video. Not that Marcus and Millichap lost a bunch of money. I don't think anybody cares about that unless you have invested with them. Deal volume for Marcus and Millichap is down 39%. Now, all U.S. deal volume is down 55% year over year. This is 12 months, 55% decrease in the amount of commercial real estate that has changed hands in this country. Now, the CEO of Marcus and Millichap said that the price gap, meaning what sellers are willing to take and buyers are willing to pay, was a large part of that decrease in revenue and, of course, in profit. In addition to losing so much money, they also lost headcount. They lost 6.4% of their sales staff, and that was across both the brokerage for real estate and the brokerage for capital. Interest rate acceptance and price acceptance are the two things that he talked about in the article. So what is interest rate acceptance and price acceptance? I've said for quite some time, since interest rates started to rise, that at some point people will choose to do business, whether that's buying their home for their family or going to a larger home for their family or buying a shopping center or an office building or whatever it may be as an investment property, regardless of interest rate at some point. That is called interest rate acceptance. It's not waiting for the rate to come down for things to go back to business again. It's the market realizing rates aren't going to go down, or they're not going back to where they used to be, or they're not going down anytime soon, and transactions happening anyway. In Houston, in the single family market, we actually have seen that here in the last month. That I'll share with you on a subsequent video. But once we have interest rate acceptance, buyers will enter the market again. And price acceptance, that's the other half of the equation, especially in the commercial realm, is an acceptance from current owners that they're not going to get the prices that they were getting 2 years ago. I recently talked to a friend of mine who had put a piece of property on the market at just under $20 million, and he has just entered that price acceptance, and he is now under contract at just a little over $15 million for that same property. Now, 2 years ago, I have no doubt he would have got around $20 million for it. But today, he has accepted around 15. That's a huge disparity, but it's something that the buyers have to accept the interest rate on, and the sellers have to accept the current pricing. Now, what does that mean for us? For us, as we're out buying shopping centers and adding those to our portfolio, we have the ability to buy at these discounted prices, and they are substantially discounted from where they had been just 2 years ago. In the case I just shared, 25% decrease from $20 million building to a $15 million building. That's a 25% discount for just a couple of percent more in interest. So the decrease in price has way more than offset the increase in interest. And when we look at that delta between the two, it is very favorable for us to pick up more and more commercial property of the right type and in the right area in this current environment. So I've never been more excited about picking up really good deals, at least not in the last 10 years. So I hope that's helpful for you to see where we are in commercial real estate and how it's affecting everything throughout the commercial real estate industry. Not just those that are buying and those that are selling, but also those that are actually brokering and those that are doing the loans for them. So hopefully that was helpful, and I'll see you in the next video. Here at ILS Legacy Holdings, we are dedicated and committed to helping you plan your path to wealth as an active or passive real estate investor. Visit ilslegacy.com to see how our companies bring investors together to help meet their financial goals.